Also, Mexico, we saw a pretty severe market reaction, particularly in the pesos. I know it's rebounded a little bit today here. But even though the final outcome, meaning Sheinbaum elected, everyone knew that was going to happen. Similar to Modi, the question now is, what's the complexion of that government and what does it mean for the market?
Yeah, we thought the market was being overly complacent about these elections. The reality is, and I'm not sure what it takes for investors to realize this, polls are not predictive. And you really can't follow them. So there were tail risks in all of these elections, and they actually materialized. And what that means is that the risk premium for these countries should be higher going forward. Mm-hmm. In the case of Mexico, what the government does with a supermajority is going to be key. If they try to pass legislation that is going to be either relating to fiscal loosening or compromising the institutions of the country, that's going to be a negative for Mexican assets.
Do you see right now, based on what we know, an investment opportunity there? And I'm talking like new positions, not people who are already
I think
invested.
you should be cautious.
Yeah.
I think you should be cautious until you understand what the policy mix is going to be going forward.
When you say the risk premium should be higher, how will we know when we've reached a point where it's about right?
Well, that's something we analyze every single day, and that's why you need active management in these countries. These have been consensus bets. Everybody has loved Mexico and India. The reality is we have found value in countries that are much less loved, the distressed countries in emerging market, sovereign dollar-denominated debt, countries like Argentina, Egypt, Angola, and even some countries that are going to emerge out of default this year, like Ghana and Sri Lanka. We prefer to avoid these consensus bets, and especially with some of these tail risks materializing, we think that you have to be cautious going forward and continuously assess them to see what policy mix is emerging and how much risk premium is warranted.
What about folks who don't need to be in emerging markets at all? I mean, we talk about the risk premium, how they should be higher, and you're talking about looking at markets that people don't love right now. It's a high bar for people to get to if it's easy for them to make 5%, 6% somewhere else at a risk-free rate.
It's an excellent question. The reality is the countries that we've liked have been up as much as 30 to 50% in the last 1 year. So I don't think this is an opportunity that investors should mix. The only difference is you have to really do your homework and choose the right countries.
Is the rate story, though, going to start to work in their favor? I mean, we've talked a lot about central banks starting to lower rates. We saw that from Bank of Canada. The expectation is ECB tomorrow, and it might be a while before the Fed gets there. But we're starting to see the direction that monetary policymakers are looking, and at least for right now, they're looking down.
Absolutely, and that is going to be another tailwind for emerging market fixed income assets. So we don't think this is an area you should absolutely ignore. Mm-hmm. There are going to be countries that perform better versus the other ones, and that's our job to basically create alpha for our investors.